Today is Monday, June 12th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Dano's Midland Company. Today's guests are Steve Freed, Vice President of Grain Research here at ADMIS, and Alan Bush, the Senior Financial Economist. Alan, according to the financial futures markets, there's a 96% possibility that the Federal Open Market Committee will increase the Fed funds rate this Wednesday. Will this tighter credit from the Fed halt the decline in the U.S. dollar index?
Normally it would. Higher interest rates tend to support a currency. But in this instance, I think that will not be the situation. I think the dollar index will probably continue to decline. And the reason is that a rate increase is fully factored in. And it now appears that the Fed is on a measured pace to raise rates down the road. Plus, other central banks are apparently backing away from their accommodation. So the interest rate differential advantage that the dollar had all of last year is no longer there. So I would expect the dollar index to continue to decline in spite of the likely rate increase from the Fed on Wednesday.
Early last week, August gold futures advanced to within $1.50 of taking out the April highs, and then a flight to quality long liquidation took prices lower later in the week. Does the double top at the 1300 area suggest the bull market is over?
Not at all. What it really implies is that there are probably going to be a buildup of buy stops above that double top area. And with our thinking that the main trend is higher, with rates still low enough to sustain a bull market, even with a rate increase from the Fed, that 1300 level will probably be taken out within the next month or so, and we'll probably see follow-through strength. So that is not a top. It is actually an indication that there will be some further buying down the road in the gold market.
We had a few geopolitical events last week. Why did stock futures advance to new historical highs in spite of the Comey testimony, the surprise in the UK elections, and the recent European bank policy meeting?
Plenty of reasons for the stock market to go down, and yet none of them are more important than the interest rate influence, even with the rate increase coming, maybe another one in December. So with rates as low as they are here domestically and globally, that will sustain the bull market. So all these other factors, I think, are short-term negatives that will ultimately be overpowered by the low interest rate influence to take stock index futures to new highs. But I think that once we get the Fed meeting out of the way, that will be the beginning of a new leg higher for all of the indices.
Let's turn to grain. Steve, it's near record hot in Chicago right now. Weather seems to be an overriding influence in the grains, or a concern at least. What can you share with the viewers regarding the impact on the markets?
Weather markets are always pretty volatile. Last week we had the corn market break out of its trading range and went to higher highs. The funds covered some of their shorts, and the farmers sold a record amount of corn last week. Going home Friday, it looked like the weather maps were going to change. We were going to go out of this hot, dry conditions, and later this week we were going to see pretty good rains for about 80, maybe 90% of the Midwest, including the northern plains. And this morning, both maps verified that. So we've got 2 more days of hot weather, and then starting Wednesday, you'll start to see some showers move across the northern part of the Midwest. The weekend should be heavy rains across most of the Midwest, favoring east of the Mississippi. As far as what it means to the market, I mean, the rally's done. And so now you have to kind of figure out on the 15-day of the map, the last panel, which is the least reliable, it shows a ridge, the strongest ridge we've seen since 2012, building up across the Midwest. So on one hand, we can say that the potential rally because of bad weather in the U.S. is over. On the other hand, we have to watch that last panel and see if it comes back.
So corn, soybeans, and wheat prices lower today. I assume that's because of the rain in the forecast?
Yes, I mean, I think that the USDA on Friday raised global soybean and wheat ending stocks. They did lower corn stocks. But the big question right now is what kind of corn yield we're going to have. We also have on June 30th the new acreage report that might show a few less wheat and corn acres and a few more bean acres. So right now the market has rallied too far because of this weather. and the weather's going to pull us back, at least corn and wheat, into the trading range. And soybean prices are too high now given the global supplies.
Southern Illinois, east part of Southern Illinois, eastern part of most of Indiana, southern Indiana, really wet a couple of weeks ago. Has that situation been alleviated now?
They had to replant about half of their corn crop, and what they replanted, the soils got crusty because it turned warm and dry. So this rain event is needed for those people. It's just when you look at the entire Midwest corn crop, right in the heart, right in the center is where the best crops are. In the south, they're late and they've had to be replanted, and in the north, they start getting, especially in the Dakotas, hot and dry, and so they kind of stopped down. In Nebraska, which is 70% irrigated, they started Friday turning the irrigation on because it's so dry. So right now, the USDA estimated that probably 68% of the crop was rated good to excellent. Normally is 72. Tonight they should lower it 4 percentage points, but if we get the rains, we'll go right back up to where we were last week.
And last week, U.S. farmers may have sold a record amount of corn. What should they do now?
Sell more. I mean, you can always replace it with a call if this ridge comes back, but they have a record amount of corn that they still have to sell. And they should even look out into the 18 and start selling 18 crops, given the carry both in the wheat and the corn market. And if we have another big crop in South America in 2018, they should sell the beans too.
What's the fund position look like right now?
Funds right now are close to a record short in the wheat. They added to the short positions in beans, meal, and oil last week. They took off 60,000 contracts, maybe more of their corn short position, and they should put them right back as long as we get this rain.
And of course, if that 15-day map looks hot and dry again, you expect the funds to maybe liquidate some more? Or again?
If we walk in here next Monday and the ridge is in there, yeah, they'll actually not only liquidate their short positions, but they probably will go long. So it's not over, but from a speculative point, it had been really nice if we had one more week of hot, dry weather before this rain event.
Well, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.